Your customers have many financial goals, some long-term, some short-term. One way to help them achieve their financial goals is through mutual funds. For their short-term goals, you can recommend debt funds, funds that invest in fixed income securities like bonds and treasury bills. But then why debt funds? Debt funds offer better liquidity, reasonable returns and flexibility of investment horizon. They are also tax efficient. One of our debt offerings is the Principal Low Duration Fund, an open-ended low-duration debt scheme investing in instruments such that the Macaulay duration of the portfolio is between 6 months and 12 months. With a gross YTM of 8.73% as on February 28, 2019 and average maturity of 199 days, Principal Low Duration Fund is a scheme which maintains lower maturity and looks to follow an accrual-based strategy. The fund is rated A1+, MFS++ by ICRA and is ideal for investors who are seeking more than liquid returns and are willing to tolerate higher volatility of time horizon ranging from 3 months to a year. But why Principal Low Duration Fund? Well, the yield curve is indicative of an attractive opportunity in the maturity bucket of 6 months to a year. Also, the spreads are greater than 120 basis points, whereas the average spread of the AAA 1 year with 3 months CD has been about 67 basis points. Lastly, the fund has stringent liquidity and credit risk parameters to optimize the risk-return proposition for the investors. That being said, here are some key portfolio highlights as of February 28, 2019. As mentioned, average maturity is 199 days, while gross yield to maturity is 8.73%. The scheme largely invests in certificate of deposits, bonds and NCD, and comprises more than 45% A1+ rated assets, with no entry or exit load. We must also take a look at the methodical process by which our investments are conducted. The process begins with rigorous credit and economic research, which is succeeded by focused fund management and finally disciplined risk management. The process ensures that every single decision is informed. Lastly, the suitability of the fund and the risk it entails is worth reasserting. The product is suitable for investors who are seeking income over a short-term investment horizon and investment in debt and money market investments. Time and patience, that's all it takes. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.